Before we go on to our Nairobi studios, let's just have a quick run through of how the Kenyan market fared for the day, for a celebration and of course helping to boost the markets today on CNBC Africa's celebratory 6th birthday day. We saw the market in Kenya manage to cross the 5,000 point mark for the very first time, closing above 5,000 points today. And of course the currency has also been something that we've been tracking, given the fact that it has been on a weakening path for the end of the month, and certainly has something we'll be checking in with in our Nairobi studios. We've got Beatrice Gachenga standing by right now, who's going to take us through what's happening on the markets with Rufus Mwanyasi, who's from Savo Securities. Beatrice, I'll hand it over to you, and you have the easier job of being on that end and of course not having to stare at a delicious chocolate cake, but we promise to send you some in the post when we tuck into it.
Samantha, I must tell you, I also have a cake right in front of me, which is beautifully yellow. I'm also trying to focus and not salivate much, so I can assure you it's also a problem, but I shall make sure that I stay on cue.
Well, there we go. So as I said, the market today closing above 5,000 points. And it's certainly, you know, if you're just talking about markets which have really come to the spotlight this year, certainly Kenya's market, and just, you know, just reflecting for a second on the year that has been, it's really been a peaceful transition into a new government that everyone, I suppose, is being given a nod of confidence in the market, and it's really been signaled through the market activity.
Yes, as you mentioned, there's a lot of optimism. Of course, that's one of the things that you're going to be discussing with the Market Watcher today. And of course, as inflation continues to slow down, that will also have an effect in the stock market and the general economy. So let us have a look at the market. Thank you for joining us, Rufus. Looking at inflation numbers that slowed down to 0.45% from 4.41 in the previous month. What are your thoughts on this, especially looking at the whole aspect of, you know, the slowdown that we saw in transport, which was nearly 1%, and of course this was on the back of the fuel price review that we saw this month. Do you see this trend going on?
I think so. We've had good rains in the month of April and May, and also oil prices internationally have been coming down. I mean, they should be trading at about $103. So I think the trend is likely to continue, bearing in mind that with the Middle East crisis beginning to stabilize, despite being some issues there, but we think that the prices are not going to climb much. So that cascading it locally, I think, is going to help in the inflation numbers trending downwards, or at least stabilize that level of 4.45 and 4.5%.
Looking at the month-on-month price, the price index, it rose by 0.17. Looking at the consumer prices, and now we are going into a month where we are going to have the budget reading, and it's one of the months that the government likes to, you know, tax some of the sin tax, if you may call it, alcohol. You're looking at narcotics. Are we likely now to find that you might have a little bit of a rebalancing of the prices?
Well, that may happen, that may happen not. It's a matter of, when it happens, then we'll know what the impact is going to be. But as things stand right now, I think just looking at the budget and the proposal that was placed, a budget of $1.6 trillion, we'll need a bit of, some increases in taxes here and there. So yes, we could be right in estimating that we could see some, increase in prices, and therefore a bit of adjustments in the prices. Well, that's a situation that remains to be seen.
You mentioned earlier on the whole issue of fuel, and we saw also a trickle-down effect on electricity. Is it something that you expect will also start feeding into the economy, looking at the stock market, looking at, disposable incomes?
Yeah, sure. Well, it's a known fact that, if the economy is set to do well, of course, there's more money in investors' money, in their pockets, sorry. And of course, that is a good number of them the money will find itself in the market. And I like to say that, I'll say a considerable percentage of the rally that we've experienced this year has come from the retailers. So in that sense, I see that, yes, it's been a good 3 months for the investors. So I expect if inflation numbers keep on going down, then that means there's more disposable income for the retail investors, and therefore we're going to see more support for the prices. And yes, we may likely see the the trend pushing upwards even more.
Looking at the NSE, it crossed to the 5,000 mark, which is it has been struggling and oscillating at 4,980, and now it has crossed over that mark. And one of the counters that helped it move up marginally was Kenya Airways, which was marginally up. And now we've learned that they've extended their code sharing agreement with China Air, and now we're looking at them entrenching themselves into the Far East. What is your thought into that strategy?
I think this is a strategy that was long overdue because for the last 2 years, their mainstay market, which is European travel numbers coming into the country, have been dwindling. So I think that the move has been long overdue. Moving into the East, look, Asian tourists right now are the ones that everyone is chasing for. So I think it makes a lot of economic sense for the firm to go after them. So I guess now this is the right move. I expect to see generally tourist numbers to increase if they're going to increase, for instance, the frequency to that side of the world. So I guess it is a good move, and I expect good numbers in the final year results.
And of course, this is coming on the back of the European routes. The numbers not doing very well. And earlier on, I had mentioned it was China Air, but it is China Southern Airline. Yes. And of course, we are seeing a lot of trade activity between China and Kenya. And going forward, this is a strategy that they may be using. Now, the numbers are coming in 2 weeks, and they had already issued a profit warning. Do you see this strategy probably helping to excite the market a little bit?
Yeah, as a matter of fact, as an investment house, we've already given it a buy rating simply because it's a stock that many people have ignored, particularly the rest of last year. So I think with that in mind, the prices have really dipped, and I think in terms of valuation, KQ offers one of the best valuation prices right now. So I think it makes perfect entry level for any investor. Okay. So in terms of impact with that kind of move, I think, well, let's give it a bit of a mid-term range, maybe say 6 months, 12 months out.